All right, so what is a trend? And I know this may be super basic kind of information and stuff for some of you, but I really think that I kind of look at trends in a unique way. And you need to have a definition for everything that you do. So maybe you haven't defined it. Maybe you have an idea of what you think is an uptrend or what you think is a downtrend or even a consolidation and not really a trend at all. But I think it's important to put definitions on these things just so that you can create rules around them, right? Because things can get very murky in the area between when trends are transitioning. So, all right, let's move forward. So, trend basics. For some of you, this may seem extremely basic, but I think it's important that we have a strong foundation and understanding of everything we do and why it is important. A stock trend, by my definition, is a consistent move in a particular direction, either higher or lower. I will refer to them as uptrends and downtrends moving forward. This doesn't mean that a stock is going up every day without any down days. Think of it as a progressive march in one direction. Let's say you take 5 steps forward, 3 steps back, then another 5 steps forward. Your progress is still forward even though there was a setback along the way. Does that make sense? A stock will tend to persist in the direction it has already been moving in. This is where the slogan, "The trend is your friend," or "Trust the trend," comes from. I can't overemphasize the importance of this. The easiest money to be made will always be trading with the trend and not against it. Not that the latter is impossible, but let's focus on becoming proficient at the easier option first. Let's look at some examples of each type of trend. All right, uptrends. Trends are like people, all different shapes and sizes, but still alike at the same time. All uptrends generally have a stair-step pattern higher, a combination of higher highs and higher lows. And that's kind of what you can see here with the little red marks. Higher high, higher low, higher high, low high, low high. Okay, so even with this one, right, where some of these are a little more obvious, this one's a little messy, but it still follows that same pattern. Downtrends. I like to say stocks take the steps up and the elevator down. Fear and panic are generally stronger emotions than greed, and I think that represents what we tend to see during trends lower. A combination of lower lows and lower highs, just like we discussed with the higher highs and the higher lows. With an uptrend, lower lows, lower highs for a downtrend. All right, trend transition. Stocks go through periods of trending up, trending down, and times of transition in between. The latter is what I refer to as non-directional, sideways, or consolidation. Sometimes the change in trend is abrupt from higher to lower, or vice versa, and sometimes a trend needs to rest and consolidate before it moves higher or lower. Sometimes a stock will change direction over a longer period of time as the trend changes direction from higher to lower, or vice versa. Think like a head and shoulders type pattern. No matter the reason, it is something to become familiar with, as there is less opportunity to make money in this environment. To be able to avoid it, you must first be able to recognize it. And I kind of consider the time where it's transitioning or consolidating when we're talking about market efficiency. I think that's where the value proposition comes in, right? So during consolidation, price is at consensus. It is at the buying pressure and selling pressure has melded at that point, and neither side is in control. So the market is essentially efficient. It's in a small range, whatever have you. There's not much opportunity there. And then when price is trending, then that is the market being inefficient as it's searching for a new price, and we can follow its lead there.